Today's JOLTS data and the response to those jobs numbers suggests the rest of this week could get interesting. I'm watching two things, bonds and Bitcoin. So kind of the same thing as usual, my two favorites. If you just kind of had to convert all my shows into one subject matter, it would probably be bonds and Bitcoin. But the risk radar has been yellow for bonds, green everywhere else. The risk that maybe the crypto light goes yellow too is on my mind, as well as maybe thinking about potentially the dollar soften, or if the exact opposite happens if yields firm back up. So there's a lot of possibilities here, and I think the rest of this week is very live. That's the main point, is that we're not quite done with this year yet. We do have the Fed cut expected to happen right now at a 72% chance according to Fed Funds futures. But given the way we responded to jobs data today, which was to see the bond market turn around, dollar firm up, yields to move higher again. It was really the first major pushback we had to several weeks of strong bond buying because the numbers were good. JOLTS hitting 7.7 instead of 7.5 was a nice return to the summer levels that suggest employment is very strong. If employment's as strong as it looks and the rest of the data follow this week, if we get a good employment print, we could very likely be looking at no cut. So that could change some of the major macro dynamics. Here's what's on my mind. Firstly, the chart. Look at bonds next to the dollar. As I pointed out earlier, something here probably has got to give. This is a pretty sizable gap on the 20-day chart. Either one of two things happens. Dollar comes down, or I think more likely, because I believe the message of the dollar more clearly than I do bonds, is that yields are likely to rise. Now, what will determine that is if the data is good or not. If data is soft, dollar's going to come in most likely, and then you close the gap by way of the dollar going down. But right now the gap is notable, and I think that the dollar's resilience up here while yields have moved lower probably suggests that the outlook for the Fed in December is not as clearly dovish as the market suggests. So I think that message of the dollar is telling us it still is up for grabs. Now, one other point too, and we're thinking about bonds, the yield curve, of course. You don't want it to get pinched. What we saw the last couple sessions here, yield curve widening back out, that's your preferred direction. Kind of no matter how it happens in my mind, though you prefer the bear steepening in the curve. Generally what you don't want is the pinch in the yield curve that we were getting there. And last month too, where we saw the bear steepening, there was a message about growth, I think, start to unwind a little bit. So that's kind of your short versus long term on bonds. You don't want to see the yield curve get pinched. You want to see some kind of steepening, whether for growth or for cuts. Then finally, Bitcoin and Microstrategy, getting kind of interesting here. Look, you don't want to try and get in the way of a freight train, and that's what crypto is when it moves with a lot of momentum. But I've talked about the long-term bearish divergence because the Bitcoin breakouts have been happening with lower momentum as measured by RSI. We actually never got the end of that. We never got the reversal of that bearish divergence. It still is in play. So to see Bitcoin kind of fighting for this 100 level, look, I think that futures hit 100. We say it did. What happens next is whatever you think, but note that MicroStrategy too has been softening up a little bit. Just want to see if we make any meaningful lower lows in MicroStrategy. If we make lower lows in MicroStrategy, then I think you've got potentially here the yellow light that needs to go on crypto, but we're not going to jump the gun there. We'll monitor it. I'll see you tomorrow. Have a great night.